So, have you ever had a day where the US dollar is firm, but USD CHF is down, natural gas is at a 10-week low, and the Germany's DAX is casually setting fresh records high like it's, well, just another Wednesday? Yep, markets are basically doing yoga right now, stretching in three different directions all at once. The big question today, however, is simple. Are we getting clarity from data or just more reason for traders to stare at the economic calendar like it's, well, owing them money? So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, and welcome to your daily market brief. As always, what we are going to do today is we're going to kick things off with fundamentals first, then technicals, keeping everything professional, practical, and adding just enough humor to keep us sane while the market tries to test everyone's emotional stop loss. Let's start with USD CHF because it's a perfect snapshot of the current environment. The dollar is holding up, but conviction is not exactly doing push-ups. The dollar index hovered around 98.5 after gains in the previous session as markets positioned ahead of another heavy run of US data that can shape expectations for Fed policy. On the calendar, we have ISM Services PMI and JOLTS job openings later today. Weekly jobless claims is tomorrow, and the main event is December's jobs report on Friday, which also I will be live for. So should you want the link for that specific session, drop me a comment and I will share it with you as well. So earlier this week, ISM data pointed to the sharpest contraction in US manufacturing since 2024, adding a softer tone underneath the dollar story. Markets also weighed on comments from Fed officials. The standout was Governor Stephan, who said the Fed needs to cut interest rates aggressively this year to sustain economic momentum. And yet, despite all that, markets are still pricing in more than an 80% chance the Fed keeps policy unchanged at the upcoming meeting. So we've got this classic tug of war, softer data and dovish commentary pulling one way, and expectations for an imminent hold pulling the other. On the external front, the dollar found support from a weaker euro after softer inflation readings in Germany and France. So if we are zooming in on USD CHF specifically, this pair fell to 0.7948, down 0.13% on the day. Over the past month, the Swiss franc, however, strengthened 1.5%, and it's up almost 13% over the last 12 months. So even with the dollar firming, the franc's longer-term strength is still a factor in the background. Looking at the charts, we are seeing a clear pause, not panic picture. The price dipped slightly intraday, described as a truce to catch its breath. It's trying to relieve overbought conditions that we can see on the RSI. There are negative overlapping signals appearing, however, which suggests near-term caution. But the short-term structure remains a bullish corrective wave supported by the pair staying above the 100 EMA, which reinforces the chance of resuming gains in the near term. Near-term resistance is currently sitting at 0.799, followed by 0.805. So technically, the summary is as follows. Short-term cooling after a push higher with broader corrective support still present. So the question for today, however, is do we get follow through once the US data drops? Or does USD CHF stay in a wait and see mode until Friday forces it to make a decision? Now let's move over to natural gas, where the forecast basically said, demand? Not today. US natural gas futures slid to around $3.60 per million British thermal units, hitting the lowest level since late October. And the key driver here was very straightforward: warmer temperature forecasts. Above normal temperature expectations across the eastern two-thirds of the US from January 7th to 11th, with warm pattern expanding into the north-central US from the 12th to the 16th of Jan. That signals reduced near-term demand and the markets responding accordingly. At the same time, traders are watching the broader energy implications of the US-Venezuela situation. Venezuela holds nearly 200 trillion cubic feet of natural gas. That is more than 60% of Latin America's total reserves. While the major immediate focus is crude oil and refined products, investors are alert to escalation risk that could lead to sanctions, infrastructure damage, disruption to liquid natural gas trade routes, or shipping lanes. So, natural gas has two forces: a clear near-term demand headwind from warm weather and a geopolitical tail risk that could become relevant if escalations impact broader energy infrastructure and transport. Looking at the charts, natural gas is trading around $3.75, up 2.79% on the day, but down 29.9% over the past month. That monthly move matters. It tells you sentiment has been leaning heavily to the downside. The technical angles line up around one central theme: bearish pressure remains dominant unless key levels are reclaimed. A bearish continuation would be confirmed by a close below the support level sitting at $3.60. Price is also trading below the 100 and 200 period exponential moving averages, confirming the breakdown and reinforcing seller control. However, an upside recovery condition is possible if we could rally above $4, which would point us back in that upward direction, with a potential higher target around $4.30. So natural gas is basically saying, I can bounce, but I'll need a reason. And right now, the reason, according to data, is simple: weather shifts. And now, the DAX. Because while other markets are debating, the DAX is just out here collecting record highs. Germany's DAX closed marginally higher on Tuesday and is extending gains for a sixth straight day, with updates showing the German 40 rising towards that psychological 25,000 level. It is up on the day 0.56% and hitting fresh record highs near 24,992. Investors are also still monitoring Venezuela's related geopolitics, but the more immediate driver in Europe has been domestic economic data. Key headlines include Germany's inflation, which eased to 1.8% in December, below forecast of 2% and below the ECB's 2% target for the first time since September 2024. France inflation dipped to 0.7%, Spain eased to 3%, and a final PMI survey confirmed Germany's private sector lost further momentum in December. Yet, despite the softening, European equities pushed higher, suggesting investors are focused on the idea that price pressure has cooled while the region remains relatively resilient. Sector-wise and stock-wise gave us some real clear movers. Daimler Truck was up over 5%. Infineon was up almost 5%. Merck was up over 3%. And Quingen was up around 2.9%, with Siemens up around 2.7%. On the downside, we saw Adidas drop around 4% after the Bank of America downgraded to underperform. So the DAX story today is record highs supported by cooler inflation data, even while growth signals look softer. Looking at the charts, near-term support is sitting around 24,500, and on the upside, resistance is currently around 25,075, which is that 138 Fibonacci extension level. However, the stochastics are showing overbought conditions, so a short-term pullback would not be out of the question. From a behavioral perspective, when an index is at fresh records, the technical conversation often shifts from breakout to price discovery. There's no old ceiling overhead. There's just how long can momentum persist before the market pauses. And with inflation undershooting expectations, traders will be watching whether that continues to support sentiment or if softer PMI momentum becomes the next dominant narrative. So traders, here's the setup. We've got USD CHF pausing with supportive structure still in place, but waiting on US data. Natural gas is under pressure from warm forecast with technicals saying prove the bounce. And the DAX is pushing record highs as inflation cools, even while momentum data softens. And tomorrow the question gets sharper. Does ISM services and JOLTS reinforce a softer US narrative, or do they complicate expectations ahead of Friday's jobs report? Because by the time we get to Friday, the market won't be hovering anymore. It will be choosing a direction, whether it feels ready or not. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.